Hi, welcome back to the Make It Count podcast. This is episode number 101, where I sit down with longtime co-host Tyler Woerner to talk about emotions and taxes. It's a different discussion than we normally have, but I think you'll find it beneficial. We cover how to not let your emotions get the best of you and the decisions you make in business. How to avoid having emotions lead you to tax schemes that can cost you more and cause future problems. And lastly, you'll learn a new metric to measure, return on hassle. Listen and enjoy.
Make it count. Join Marcus, founder of the Total Control Accounting System, as he leads dynamic discussions with business leaders and industry experts. Marcus drives their targeted insights toward helping you navigate challenges and maximize profitability in your small business. Make it count.
We're starting off this podcast episode in great form. But today's episode, I have a PSA, right? I'm not even sure what PSA stands for. Public service announcement?
Yeah.
Okay, just making sure. Yeah. I'm like, I have a PSA. I don't even know what it is.
You have so many acronyms in your life.
I know. I know. Yeah. They get jumbled.
Yeah.
I want to get people. I want to level up.
All right.
Because you've heard me talk about this. Even I have a buddy of mine, Blaze. He's like my number one fan. He listens to all
He's been on the podcast.
He's been on the podcast.
Yeah.
He always talks about, he knows I always mention like TikTok and stuff. And TikTok has now become like the figurative punching bag for bad tax advice.
Sure, yeah.
But what I want to get from people is I want to bring this point home, because it's happening more and more often, where people are getting misled into tax schemes, I'm going to call them, because of an emotional pull. And so you and I were talking before we turned the cameras on, so we're recording, about what emotion can do to you around your money. So people are emotional around money, which makes you make illogical decisions. So I just want to have a conversation, really, and you had some good thoughts and good questions around kind of having a sobriety around when somebody's pitching you a scheme. And so what I want you to leave this episode with is kind of understanding a few concepts. One being, in the tax world, and generally speaking, we want to do things for a profit motive. Now that sounds kind of silly saying it off the cuff, but what I mean is, so many times I hear people lead with, I want to save some taxes, I'm going to do this thing. And this thing could be invest in a business or spend this money. And I always say, well, do you think it's a good idea economically? Like, if you're going to do something, do it because it makes business sense. I'm starting to see that get lost on people because of the point you made. They're emotional around money. Whatever the reason, I hate the government, it should be limited government, they waste our money, all valid thoughts. But that starts to creep into decision making, and I want to level up people around, listen, if you spend $1 and you're in the highest tax bracket, all it saves you is 40 cents. It still costs you 60. So let's make good economic decisions, and let's not get caught up in schemes trying to avoid taxes that we're emotional about. I think that's, if I could cut to the chase, that's the point.
Yeah. So to kind of set up the premise is, like, what you've seen is people, because they're obviously emotionally tied to their money. I mean, and you're talking about the whole year's worth of money.
Correct.
I mean, you're talking about
that's a good point.
Bottom line type money. And so they see it. That, like, you talk about this often, how, like, that's when they see it.
It's like the mirror.
Exactly.
You get your tax return and go, we paid how much in taxes?
Right. Yeah.
That kind of thing.
And then you start doing the math, like, oh my gosh, I paid 20 grand or 40 grand or whatever the thing is to this. And then you start. There is an emotional response. And I think, why don't you just talk a little bit about how are other people preying on that? How are other people sort of meeting people where they are in their rage?
Well, they're hitting the buzzwords. They're hitting things like when I went on Chaz Roberts' podcast, I even jokingly texted him. He said, "What we're going to talk about taxes? What's a kind of a lead in or a title?" And I said, 5 loopholes the rich won't tell you about. And we were laughing. I was laughing. I think that's ultimately, we went with that kind of tongue in cheek, but that's the kind of stuff. So ultimately, get your curiosity around, the rich people get over on us. They don't pay any taxes. Why? Like, I've heard multiple people come to me when the Trump tax returns are released. How does the rich get all the loopholes? I'm like, they're not loopholes. They're called readily available deductions to you and me. Like, so they prey upon that kind of naivete or the curiosity, and also that, I'm going to say, envy a little bit. Like, why do the rich people get to do it? And then it pulls the strings around people thinking, I'm paying 30-40%. It is an emotional thing. So it's an easy sell to get you into a topic that is super nuanced. And increasingly, like, our industry, I think, is doing a better job of like working with people throughout the year on a more subscription basis, more advisory basis. And inevitably, you've even asked me this sometimes. Sometimes it is hard to just boil it down. Like, you've even said, just tell me the rate as a percentage of every dollar. And I always say, dude, it depends. And I think of that a lot when people are getting schemes in a 1-minute video. I'm like, man, they're missing 100 nuances that could affect your situation. So to answer your question, it's a quick video, harping on things you're already kind of emotional about, and then things you're really curious about, like, or envious of, how does somebody do something that I can't do?
Yeah. I don't know. It's almost like you would probably agree, like, the tax code is complex.
Super complex.
And that doesn't necessarily assume a virtue to it. Like, it's not complex to your advantage or to your detriment necessarily. It's just the reality.
It can be.
Yeah. It's just complex.
Yeah.
You know what I mean? So, like, I think that's the thing, is like, people think, oh man, in its complexity, there is something that I don't know. Because there's something I don't know, there's the possibility of like it's easy to sell somebody on a loophole or
exactly.
like
for instance, I was on a call with somebody and they were talking about, what if I invest in this business? Will it save me taxes? If we invest $100,000 and we get $100,000, tax write-off, right? I said, well, no. Like, even that, I had to go into a 10-minute conversation. I had to, just to cut to the chase, I had to say, like, well, if you invest $100,000, then you're going to get a K-1 at the end of the year that says this is the share of the earnings or loss of the business. It has nothing to do with your 100. So I had to separate them from the $100,000. Like, I put in 100, I should get a deduction. No, you don't. Well, if you invest in that business and you own 10% and the company makes $50,000, your K-1 will say you made $5,000. Yeah. When you put in 100 and you're wondering how, like, I had to.
Well, here I can help you with that, just from the client perspective, because I do that often. I see the pattern. Not maybe that make that exact same mistake, but what you do is you learn a little bit about how taxes work, and then you apply those same principles everywhere. Right. So, like, this was how I can remember maybe even asking that same question, because my logic went like this: oh, everything I spend on my business is a write-off, or I can every business expense. Correct. Well, now that my business is buying businesses, or my business is spending money on business, well, surely those are all expensive. Like, so it just becomes like you don't understand the difference between classes and different things like that.
Yeah.
So,
or an investment versus a deduction.
Right. And so you just, the average person who's done, maybe even is savvy, they've filed as a business a few years, they're just adopting the things that they've learned at every place they can.
Yeah, it's a good point. I think, I don't know why it is in our field people do that more than others. I don't think people do that like in law. I don't people say I've read a lease agreement, therefore I draft my own will. Yeah. But it seems to be a little bit of a jump people make in the tax world, which arguably you could say is more complicated. Mm-hmm. Not saying you got to be smarter to do taxes than to be a lawyer. It's a different deal, but it's super nuanced and complex. And so, yeah, I get what you're saying. I think if I could give somebody a pointer, if you're listening to this, I would say, learn about taxes, understand it, start to understand, if you're a business owner, balance sheet and P&L and how those go together, and some things around how taxes work and how the money flows. Mm-hmm. But always do it out of a mind that's curious, not out of a mind that's made the decision already. Yeah. Because in my business, what ultimately gets people and really gets them sideways with their CPA, honestly, is expectations. Like, if I didn't have that conversation I just had, that client leaves thinking I make the $100,000 investment. Okay, next year that saves me probably $40,000 in taxes. We get to do their tax return. I tell them they owe money, and they go, well, how the heck does that happen? Now they're questioning me. Mm-hmm. Hey, we had this deduction of $100,000. I have to say, well, no, that's not how it works. You get what I'm saying? So I would say just be working with somebody, start to formulate some expectations and some thoughts, but don't close the loop around I've made that decision without even asking anybody. I think it would be like in terms of how you develop that skill.
Yeah, and I mean, let's get back to what we opened this with. There was a phrase you mentioned, and it was a type of call. What was it?
Return on hassle?
A return on hassle. Yeah, let's explore return on hassle.
Yeah, I saw, who was it? Somebody posted this, Alex Hormozy. A lot of people like Alex Hormozy. $1 Million Offers, I think it is, 10 million, whatever it is. He's the author, guy who's, I think he has acquisition.com. Okay. Big kind of startup guy, big following. He did a video. It was like a 30 or 40 minute YouTube video. And the premise, I'll cut to the chase, was, I can do a lot of things from a tax perspective, but the savings is not worth it. So he even was articulating that there is a savings, but it wasn't worth it. Give you an example. I hear people all the time, I want to start these different businesses. I want to have trust. I say, why? What's the reason? First of all, I'm not even sure it saves you money. So that's a different point. Second point I'm making is, do you know what it's like to own multiple businesses, to have to file the Secretary of State report every year, to keep a set of books, to pay somebody to form those things, to get a CPA, to file the tax return? Like, administratively, now you miss a deadline because you forgot you had this company. Now you got a late filing penalty. Mm-hmm. Administratively, do you want to, pardon my French here, screw with that? Mm-hmm. And I think, so the concept of return on hassle is just that. Sometimes, and oftentimes, if you talk to people who've really done well, ask them. Sometimes the best strategy is simplicity. It's not sexy. It is not what you're hearing on TikTok, but I promise you, it helps you sleep better at night. And it can ultimately be a better strategy because your mind is focusing on making money. You're focused on improving the economics of your situation, not trying to carve off 30 cents off the dollar to save money on a tax move. Mm-hmm. You're willing to pay your taxes because you know you're keeping the lion's share of the money and you're growing your net worth. And so think about what you're doing. Think about what you've been told to do. Are you willing to set up 3 companies in trust and a management company and a lease agreement from this company to that one and lease your personal vehicle? Like all this stuff you keep hearing. Are you willing to do that? Does it even make sense?
Yeah. Especially if it's not motivated, if it's only motivated by a tax savings.
Correct.
Because I think what you know the behind the scenes, right? So that's sort of your beef, right? If maybe we'll exaggerate this beef you have with TikTok tax advice, but point is behind that they're selling service, and so when you do that math, you're like, okay, I'm going to spend money on this compliance. And that may be, if I spent, I remember you explaining the jump between like moving from an S corp to just going back to
sole proprietorship.
Yeah, and I think it was a matter of a few $1,000s. And so that becomes a real question mark of like, well, do you want to save $3,000 on taxes, or do you want to spend $4,000 on compliance services?
Yeah, I forgot about that because we were talking about you being on payroll and file a separate return.
and I don't know if I quite got that pitch right, but just like that's what you're weighing. That's what absolutely. That's what's in the balance here.
Correct.
And that's at every scale. And one of the things too is like you don't realize until you're managing multiple businesses is that that's just. It's not just the tax liabilities that you've added 3 new tax liabilities, but there's now 3 new tax variables, and like that's just more things that could go wrong, more things that could be miscalculated, not considered, and so that's why if you already take a complex tax code and multiply it by 3 in its complexity. Yeah. To think that that's going to save you, you know what I mean?
And it might. But again, is it worth the hassle?
Yeah.
Return on hassle is a real thing. It's like the guy, like you've heard people that like wealthy and they start buying toys. Well, now they you got a boat. You got a place to keep it. You got to wash it. You got to every once in a while take it out because the engine hadn't run, or you gotta this or that, you gotta store it, you gotta keep it, you gotta have somebody watch over. You go, oh, did we renew the title? The license, or like this is a real thing. Mm-hmm. And so it's no different in the tax world. But if I could kind of come back to the original point, it's because people get emotional and build this premise around, I'm really getting screwed on taxes. Mm-hmm. And then it kind of leads to all sorts of emotional and illogical decisions. And I'm saying this knowing that these are smart people. These are not people who are not savvy. So I don't want to. I want to make that distinction. I don't want people to think I'm talking about people who are not educated. These are people who are smart, but it comes from a place of feeling very frustrated, which I get. I mean, again, I'm not the one.
Right.
I'm not taking your tax money, and nor do I agree with how much you're paying. I'm just telling you it is what it is.
Yeah.
So I think a lot of it comes from that. So I want to give some people, if you're saying, oh man, I've made these kind of thoughts, don't feel bad. I'm just trying to clarify and get you to the point of saying, I'm not saying throw all the ideas out, kind of throw the baby out with the bathwater concept. I am saying think about the hassle, think about the steps. Is it worth it? Bring more scrutiny.
Yeah.
Does this help you? And maybe it does at the end of that.
And maybe I shouldn't even bring this up, but I mean, is there that like 1 out of 100 person who like goes the extra mile and like does all the like? Have you seen it done and they save like 2%?
Yeah, I've seen people do all kinds of stuff. And it becomes a full-time job for them to keep up with stuff. And maybe it does save them, but it's like, yeah, but you lost 4 Saturdays out of the year. Was that worth it?
Yeah.
Yeah. So I have seen that before. Engineers
and I
probably
think
be the ones.
that's probably the key is like we talk a lot about the difference between tax planning and then like sort of reacting.
Yeah.
And I think when you're tax planning, all that foresight you can see with much more clarity than when you're reacting emotionally. And that's
a good point.
You know what I mean? So like whenever you're responding emotionally, you're like, I'm going to get even and I'm not going to look like
the wound is fresh.
Yeah. And like and this foresight, who cares? I'll spend the rest of my life like getting this right. You know what I mean? Like, you're just like,
I'm going to become a tax attorney.
Yeah, exactly. I'll show them.
Yeah.
Like I have probably 3 books on small business accounting. I've not read a single one of them, but I can guarantee I bought them all in moments of frustration. Like, I'm going to tackle this and I'm going to do it,
I'm laughing because was this the year you called me because you didn't have a balance sheet and you were trying to sell your company? Was that the year?
It was probably after I hung up the phone. I went and bought that book.
You went to Barnes and Noble.
Yeah, exactly.
Accounting for Dummies.
Yeah. So like I can resonate with that like response, you know what I mean? Because when you're just like, no, I'm not, like I'm getting screwed here and I'm tired of it, I'm
gonna take matters in my own hands.
Yeah, exactly. Yeah. But whenever you can plan, like then you can start to see with some clarity, like, you know what? Yeah, I understand that I'm gonna I understand the difference, and then you can calculate that, and you can add up the other costs, the cost of your time, the cost of your just other emotional energy of managing multiple different things.
Yeah.
All of that comes into more clarity.
Yeah, for sure. Yeah, I mean, I think in just having somebody to ask that question to just get a little clarity around. It's like, for example, I have a bunch of buddies that are builders, right? I start thinking about I want to do something. We're looking at some stuff at our house and doing some different things. And I just call a builder. Like I have these thoughts and they literally cut to the chase in like 30 seconds. Mm-hmm. They're like, oh yeah, you should do this and this. Oh yeah, I didn't think about that. Yeah. Just have that person in that world. That's your CPA that's proactively planning with you.
Yeah.
Have that person in your Rolodex. Say, is that even a term anymore?
People get the idea, I think.
I said it. I looked at you like, oh man.
Yeah,
2024.
I think I would retire that word.
All right,
especially since you're coming at TikTok. TikTok so hard. I think it sort of caricatures you in a different way.
I'm not that old, but it's bad. Just have somebody that you can quickly call or shoot an quick email to, and just say, hey, I was thinking about this. Just kind of tell me if I'm missing something, right?
Yeah.
Just be curious. But be open-minded that you may be barking up the wrong tree, or it may be something that's not worth it. And maybe it is. I mean, I'll also say this. Clients have brought things to me before that I had not considered or thought of. I do not know everything in the tax world. It's super complex. I don't know every strategy. That's why there's specialists. I think people think this too, kind of a little step back in the CPA world, like your CPA should know everything. Well, you don't go to your general practitioner if you got a heart surgery. You send you to a cardiologist.
Yeah.
Like in our world, increasingly, I don't know why CPAs do this. They try to be all those things. Sometimes I just say, look, man, I don't know. We'll call a buddy of mine. He specializes in that.
Yeah.
So if nothing else, have that CPA that's the quarterback that can get you the answer. I'm dealing with some stuff with a client right now. I say, look, we probably ought to bring in a tax attorney to look over our shoulder. They know more about this than I do. It's fair.
Yeah.
So,
yeah, I think what you see happen and what you're trying to avoid is maybe we can coin another term like rage planning. Like
Out with Rolodex, in with rage planning.
In with rage planning.
Okay, got it.
I mean, yeah. So that's the maybe that's the PSA. Don't rage plan your taxes. Cool out. We can empathize with the rage.
100%.
You know what I mean? But like, it's not gonna produce the savings you think it will.
Correct.
As it will never like you said before. I mean, you had it. What's the phrase?
Is the juice worth the squeeze?
Yeah, no, it's not. It was more targeted to plan. I mean, you can't outplan. Like the best strategy is
sometimes being organized.
Yeah, is being organized.
Yeah, Yeah, I mean,
so that principle still stands.
Correct, and I do want to leave people with here. What we're not saying is there's not a place for complex tax planning. We're not saying there's not a place for that. What we are saying is that's for a limited few normally, and it's nuanced. And it takes a specialist, and it takes people that know what they're doing, and it's not generally derived in a 90-second video.
Yeah. Can I maybe peel back a little bit more of this of this emotional onion? I think here's why. We started this whole thing about the emotions, right? And I think because these people they're hitting on that emotional thing, and I think when you do that. When you identify someone's, like, you can empathize with their rage, they trust you.
Yeah.
And so I think what's happening is they don't trust their CPAs anymore. It's like me and my wife talk about this all the time with doctors. Like, doctors listen out there, take this for what it's worth.
I know where you're going with this.
No one trusts you anymore. Unless it's like really escalated, but like
correct, yeah, that's a good point.
No, people aren't really they trust the internet, and it's like the doctors joke about like you're really showing up in my office with WebMD. Yeah, that's the world we live in. Like because if you go to a doctor and they don't give you the time, they don't empathize with you. They just say, okay, we'll take this or do that or whatever, and the problem doesn't go away. Well, they don't trust. You lose that trust.
Yeah, that's a good point.
So then that's why, whether they're true claims or not, people explore alternatives in any other. I mean, that's why we've got.
And information is readily available in their pocket.
Yeah, exactly. I mean, we've got like. Yeah, not to get in a whole different world. I remember my dad went through terminal cancer, and I just remember there were so many. It was like fascinating to see how much a medical science there was, and then yet still how much, like, you'd hear incredible miracle claims on both sides, like, wow, look at this technology can do to like turn things around, and wow, look at what like just drinking vegetable juice for 90 days can do. Like, you know what I mean? Like so you really don't know where to turn. You know? That's a real extreme example of saying, like, I think that's what, anytime you're dealing with complexity and nuance, it's that who can, I think that's what people are striking at, and they're losing trust in professionals.
Right.
No,
it's a good point, and I will say this: it's also made me step up my game. So it's made me want to give more information in our newsletter, in the content we produce on social, and this podcast is to educate. Honestly, I could say it's one of the reasons why we started doing the podcast, is because I wanted to be the one, not to say I'm the only voice or the best voice, but to be a voice in the conversation of my clients saying, hey, this is what I see, this is what I'm thinking. I'm not just the guy doing compliance work at the end of the deal or telling you no to something. I'm giving you the strategy around why it works or how it works, so that if you want to implement this, first of all, you know about it. Second of all, you can do it the right way, like employing your kids. We talked about that I think we did a whole episode on that. Yeah. And a lot of the episode was nuanced around, hey, man, do this the right way. Make sure it makes sense. Make sure you pay reasonable wage for reasonable work, and do it in this kind of company. Because I know you're hearing this all the time, but they're not giving you the nuance. I want to be the one to give you the nuance.
Yeah, that's good. Last thing, I think, one of the things you mentioned was something I had never heard of before, but maybe maybe address some of the risks of what the IRS can do in response to some of these things. Like you mentioned a whole thing I had never heard of. It's
called a step transaction doctrine, which is basically, so think about it this way. Think about if you have a company and you set up a management company and you set up a rental company and you start basically running all the operations of what would be one organization in multiple. The IRS can come in and basically just say, no, it's a sham. We're just going to say from point A to point B, we're cutting out everything in between. And we're just going to say what really happened. Because this came up in a court case recently where clients they had a separate company for marketing, and they paid a marketing fee from, let's just say $100,000, make the math easy, from one company to the other. So the company paying the $100,000 deducts it. The company paying the $100,000, receiving the $100,000 picks it up as taxable. And then they're paying marketing consultants in that company. But they're paying them less than the $100,000 they received. Well, the IRS just said, well, we're just going to say the deduction is what you paid the outside third-party people. We don't care that you paid $100,000 between you two. We don't even care about that. That's what they were saying. It's documented. So when you start thinking, I would say the term is, when you start saying stuff like, can we say it's this? I hear that a lot from clients. Hey, if we do this, can we just say it's this? When you start to change how things work and what you do, and just, hey, we just want to act like it's something different, pause.
Yeah. Yeah.
When you've said that, you already kind of know.
Yeah.
You're asking me or your professional for validation on something where you're getting in murky water. And I would just say, if it doesn't make business sense, generally speaking, not always, but if it doesn't make business sense, probably not a best idea.
Yeah.
Yeah.
That's good. Good place to end it. I mean, lead with the basic business motivations. I mean, profit, and I mean that
the stuff your grandpa told you.
Right. Yeah.
Try to make money, save your money, do the right thing.
Right.
Don't get emotional. Again, we're saying we agree with the taxes. Don't misconstrue what we're saying.
Yeah.
You might have called yourself an anarcho-capitalist?
Anarcho-capitalist, yeah. That's
a whole other podcast. Yeah. But my point is just to bring us some...
that was way back, yeah.
Yeah, I mean, just look, I'm not saying we agree with the taxes either, but let's figure out how to save them ethically and responsibly and also while we make money.
Yeah. Well, good deal. As always, you can find more information at Mire.group. You can find all the other podcasts there as well, and you can reach out to Marcus and his team at Mire.group. Hope to see you there.
All right. See you guys.